Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Cathie Wood's biggest mistake, which is selling Palantir Technologies. We're going to go over Palantir's latest price targets by analysts, if Palantir Technologies is a good buying opportunity right now, what is the risk to reward by investing or continuously investing into the PLTR stock, and we will go over the latest positive and negative news updates regarding Palantir Technologies. For more videos like this one, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below and your price targets for the PLTR stock, and without further ado, let's jump right into today's stories. So if you didn't know, Palantir Technologies is a big data and analytics company that serves both commercial clients as well as government agencies. The current stock price currently trades for around $13.56, while the low-end 12-month price target for the company is $9. The average price consensus for the stock is $15.05, while the high-end bullish price prediction is $25.30. So with the current stock price being $13.56, rubbing up against the average price consensus among analysts and other professionals, is it a good buying opportunity? Well, first I want to go over some of the problems with Palantir Technologies, and it's not problems with the company inherently, it's actually a problem of how the public and other companies view Palantir Technologies. Just listen to some of these news articles and these headlines. For instance, Palantir trades. Shares in the controversial data analytics company Palantir Technologies begin trading publicly on Wednesday. That's from the Financial Times. We have Palantir embraces controversial US government contract work. That's from Bloomberg. The United Kingdom government has ended a controversial data agreement with the US tech firm Palantir following criticism from privacy campaigners. That's CNBC. Palantir, the controversial data company, makes its Wall Street debut. That's CNN. Palantir is not a consumer-facing company, but its work has generated public protest. That's the Financial Times. And lastly, Peter Thiel's secret data giant Palantir. That's the Wall Street Journal. So these inherently are not very good headlines because they're saying that Palantir is extremely controversial, and most of them have a negative connotation with them. So we are actually going to discuss how other companies, institutions, and even investors view Palantir can hurt their overall valuation, and then we're going to move on to more of the positive aspects of investing into Palantir Technologies. So the image of a company impacts the company's effectiveness within the space in which the company is trying to penetrate, and for Palantir Technologies, that would be both government clients as well as commercial enterprises. Because Palantir plans to become the default operating system for the government overall, which to me is a fantastic goal. However, there has been strong resistance from politicians to give Palantir too much power in the government as well as in the commercial space, and this could drastically restrict Palantir's overall reach into those two segments. So Palantir is literally fighting its way against mainstream media due to all of its challenges and the negativity surrounding Palantir Technologies, not just from mainstream media, but as well as from analysts and Wall Street as a whole. And this can harm its overall valuation because it leads investors to believe that this is a very bad company to invest into, and it can actually hurt their representation in the commercial sector, which can prevent them from landing more contracts with commercial enterprises. Because given the headlines that I read earlier, it's not surprising that many large technology firms in the commercial space do not want to do business with Palantir Technologies because that would reflect very badly on those businesses from a media standpoint. Because if a large enterprise ends up using Palantir's technology, the media can really throw that company's name through the mud, and companies normally bow down to the opinions of the media, which really hurts Palantir in the long run. Another problem with Palantir is that this has created an environment where Palantir Technologies is having an extraordinarily hard time penetrating the Fortune 500 companies and the major large cap companies that we are all familiar with. So this bad media sentiment surrounding Palantir Technologies is weighing the company down in both terms of contract revenue generation as well as their overall stock price. Some investors think that Palantir Technologies is so unique in their technology that they don't have any competitors. Now, I want to define what we mean by competition or competitors. Normally, competition is divided into two main sections, and that is direct competition, which means the companies do basically the exact same thing, and indirect competition, which means that the companies don't do the same thing, but one company can still supplement the other. However, in this video, when I say competition, I am referring to both types of competition, and in this case, Palantir does face competition from other big data and analytics software companies. And we know this because back in 2020, the Department of Justice, also known as the DOJ, actually replaced Palantir with DataWalk regarding their anti-money laundering division. Other competitors could be IBM, Oracle, Cloudera, KKR, and a plethora of others. Although these other companies don't have the exact same type of software and technology that Palantir has, they are still good substitutes, which makes Palantir replaceable in some regards. However, with that being said, I still like Palantir Technologies. I love their business model because it's a very profitable business model, and they are also increasing their overall margins. Now, where I am going to start to separate and push back on this particular author is that this author believes that Palantir will grow at a decreasing rate over the next 5 years. Now, I want to push back on this because at minimum, I believe from my personal analysis on the PLTR stock and the overall company, and even management states that they are supposed to have a stable 30% CAGR or compounding annual growth rate from now until 2025, which means Palantir could bring in $4 billion or more worth of revenues in 2025. And to me, that does not signify a decreasing rate of return for their revenues. It actually is a stable rate of return from now until 2025. So that's where I actually will disagree with this very bearish author considering Palantir Technologies. He also lastly adds that Palantir seems to be fully valued right now, and if we apply a 5.3 times price to sales ratio on management's 2025 revenue estimates, which come in at around $4.4 billion, that would translate to around a $23 billion market cap, which is basically where the company is currently trading at. So he's saying that Palantir is not supposed to grow in their overall appreciation for their PLTR stock price from now until 2025, but that is yet to be seen, and I personally would disagree with them, even though I do think that Palantir is more fairly valued now than what they were before. Now let's start getting into the positives. So Palantir Technologies has enjoyed a very robust recovery lately, which should really excite investors, because at one point I believed that the PLTR stock, trading at almost $9 per share, was slightly undervalued, even though ideally I would want to get Palantir as cheap as I can. But the good news is that the PLTR stock price has appreciated from just over $9 back to around $13 per share, which means that they are more fairly valued right now. However, the author of this article says that it's still in the buy zone, so let's see what he has to say. So the author says that there is still implied upside of more than 40% considering the average price target and the bullish price target. Now, for me, I would say it's more than 50% upside for the bullish price target for sure. We could actually see an almost 100% upside in the most bullish price target. Besides that, I also want to say that the conflict between Russia and Ukraine, specifically Russia's invasion of Ukraine, is going to make European governments bow to Palantir's technology, because Palantir is not only extremely secure and safe, it's also very potent and effective because the United States government uses Palantir. So Palantir could use this as a fantastic opportunity to penetrate more into European governments, which would increase their overall revenues, the adoption of their Gotham platform, as well as their overall brand awareness in Europe. So although the PLTR stock price seems fairly valued right now, long-term investors could use this as a potential buying opportunity. However, you need to keep in mind that the stock is still going to be very volatile in the short term. However, this particular author says that the Palantir stock price is a clear buying opportunity right now. And for me, it depends on your personal portfolio and how much risk you're willing to take on. For me, I never allocate more than 5% of my portfolio to a single stock. That's just proper risk management. And we are actually going to go over where is the best buying opportunities for the PLTR stock, and that is going to happen in our next article, where we're going to talk about Cathie Wood and technology stocks in general. However, we can see that Palantir Technologies, although they do have potential game-changing technology and they are a fantastic technology stock, they are growing their revenues very rapidly right now. However, when Cathie Wood of Ark Invest abandoned and sold all of her PLTR shares, it concerned retail investors. However, Cathie Wood of Ark Invest should really regret selling Palantir in the short term, because since she liquidated her PLTR shares, the stock price has been up more than 20% since that time. And the author believes that just over $9 was Palantir's bottom, and from here on out we could see volatility, but that the stock price is going to appreciate very slowly as time goes on, which is the main long-term bullish argument. So the author says to continuously buy this stock on weakness. He says that his ideal target entry points would be around $11 per share. However, if it drops below $10, that would even be more ideal. But for investors getting in at those prices, they need to set a stop loss at around $9, because the author believes if it falls below $9, it would continuously trend down. However, if that doesn't happen, he thinks in the short term it will be very volatile around $13 per share, and in the medium term, it'll appreciate to around $15. So it depends on how long you want to hold this company before it really starts to gain traction and even profitability. For instance, Palantir has consistently beat analysts' projections, forecasts, and even predictions for their revenues. Just in a recent earnings report, their revenues grew by over 34% year over year to $433 million for the quarter, beating estimates by over $15 million. They are also almost profitable. Palantir Technologies is supposed to be profitable on a GAAP basis in 2024. However, I do want to point out that they are already positive on a non-GAAP basis, mainly due to their adjusted free cash flows being around $424 million for the year, and the company was profitable at 2 cents adjusted earnings per share. The company is also growing itself internally by hiring more engineers and salespeople, which is supposed to boost overall revenues. However, I do want to point out, like we started in the beginning, that this stock is a very speculative play and it's not without its risk. First risk would be macroeconomic factors of a recession, which could really hurt technology investments and growth stocks in general. Another risk of Palantir Technologies is their stock-based compensation program. Also, another risk is that the shares are not guaranteed to continuously appreciate. The shares could most certainly fall back to around $9 per share and or lower. But with that being said, in my personal opinion, if you have over 5% of your overall portfolio allocated to this stock, that is taking on unnecessary risk in my opinion. However, you should do what's best for your portfolio based on your own research. But I will practice proper risk management because it's not like Palantir Technologies is the only fantastic stock to buy right now. There are a plethora of other growth and technology stocks that are on sale right now, which should really boost investor sentiment for the overall PLTR stock. So this begs the question, should we buy the PLTR stock? Well, the answer to this is that it depends. It depends on you, your portfolio goals, your risk tolerance, your risk management policies, as well as how long you're willing to hold this company. I also want to add that the PLTR stock is trading at a premium right now, even though technically it can be argued that they are trading at a fair value price right now. Their price to sales ratio is trading at around 14.21 times their trailing 12-month sales. So are you willing to buy at a premium right now, have the stock price be very volatile until past 2025 to 2026, and then from then on, that's when you're going to experience your overall gains? If you're not willing to do that, it's best for you to invest into Palantir Technologies later when the company actually becomes profitable, which will be in 2024, according to current projections. However, if you are a long-term investor, you don't mind paying a premium right now, then go for it. Just practice proper risk management, please. Don't pretend that there is no risk by investing into this company. However, with that being said, I would love to hear your thoughts down below. Remember to go and smash that like button right now, subscribe if you are new, and I will see you in the next YT video.